Let's get you updated on the latest from the futures markets right now as we get started over here in the corn market. On the weaker side all the way across the board in all of these commodities here today, led by, of course, the financial markets, and that's on the fear of coronavirus. In the corn right now, the front month is for all intents and purposes, the May, down 2 1/4 at 373 3/4. December down 4, 377 1/2. Soybeans for May down 14 1/4. September down 14 1/4 at 887 1/2. Wheat market for Chicago, May now at 520 3/4. July up 3 1/2, 520 1/4. A little bit of a rebound here. Still in the negative category for the Kansas City wheat. May down 1 3/4. July down 1 1/2, 452. I want to look at heating oil because last night on the overnight trade, heating oil fell sharply. We are off of the lows. Heating oil, that cousin to diesel fuel, on the April contract got all the way down to 107 a gallon. Right now we're at 167, or down 16 cents at 121 a gallon. The May also down 16 cents at 121. And now looking at crude oil, April is off of its low, 34.27, down 7.01 a barrel. May down 6.86 at 34.65. And a guy who has been talking about this crude oil market for a long time, Todd Horwitz, Bubba Trading. You're smiling and laughing here. Okay, crude oil down into all the way down through the 30s here, Todd, and dipped into the 20s. So you got to wonder, though, is the bottom in here? But one of the things I noticed you were talking about earlier as you were sending out your tweets was the fact, don't chase this market.
100%, John. Look, I don't know if the bottoms are in, but certainly if you're looking to hedge your oil now, I mean, you're not going to get much better than this. This is the time that you for sure step in and at least protect your costs for the rest of the year, because I think there's a chance we go lower. I mean, you know, we broke to 27.89 overnight. So I think there's a chance they go lower. And it was evident when I did my morning update yesterday. I said 30's in play now. You could just see the way what was going on. So now it came down and we're getting a little bit of bounce, which you should get. Now, there's going to be a more of an extended rally here, but it's going to fail. The real question is, will it take out the lows? How much trouble is there? How much is Saudi Arabia going to push more oil onto the system? And how aggressive is everybody going to get? But certainly, if you're hedging it, this is the great time to step in. I mean, you know, it's been in the 60s. You're now in the low 30s. So you might as well take advantage of that. But I think there's probably more room on the downside. I would say probably there's an outside chance we can get down to 20 before this is all said and done. But for right now, again, I'm gonna protect myself. If I use it, I don't need to have any higher costs. This is a great savings for our guys out there that are using oil, and it can put the money away right now and lock it up. You don't have to worry about it.
Is there anything else in this market that you're watching real closely? You know, we've seen what's happened here today over in the stock market and the money markets as well. Tripped some triggers, some limit moves, or what they call circuit breakers.
Limit down 3 times in the equities this morning. I think that's that was a sign. And of course, I think we're going a lot lower, but there's going to be a rally. There's always going to be a rally off of action like this. Now, how far will the rally go? We don't know. I think the grains look really good. That's the one thing I did want to comment on. I think grains, I think wheat looks great. It's actually in positive territory right now. Corn was down much lower, and this is following Friday's ugly day. I think that looks pretty good. And even soybeans, although they're down about 15 cents or whatever it was, they don't look so bad. You know, this was wholesale selling this morning, especially on the opening. You know, these markets built up a lot of combustion, especially the meats things, and everybody just sell. Nobody was thinking. They were selling first and asking questions later. So I think the way they've rebounded here and the way they've held their ground, I think that makes them look pretty strong. And I'm looking to be a buyer. I'm now long corn and long wheat. I'm still short soybeans, but I'd like to get long those too at some point.
Okay, sounds good. We'll be back in just a moment. We'll get your thoughts on the livestock trade straight ahead here on the Market Day Report. Let's go back to Todd Horwitz, who seems to find a silver lining in just about everything. Todd, here during the break, you were talking about forced liquidation. I know that you've used that term before. Are you anticipating possibly something like that in this livestock trade?
I am. My biggest concern, John, is you saw this morning, okay, we had, the minute they opened, they were down limit, right? Fats and feeders, bang, bang, goodbye, and hogs. But again, I think they're starting to try to make a bottom. The only thing that can get in the way here is if the banks step in and they get a little nervous, which is typical. And of course, if they get nervous and that loan value starts to dissipate away, they're going to force people out. And that would actually create, obviously, a much lower bottom, but a bottom just the same. So I'm hoping that they can hold their ground here, because I would hate to see that happen once again, because that always signals the end of a down move. But I think that the markets themselves are acting fine based on what's going on around everywhere else. Again, today is not a day you can track what's really happening, because today was more of, I got to sell everything, I got to raise money. Okay, so if we can stay away from any forced liquidations, I think the bottoms are probably in cattle, and I think the bottoms are in hogs. So I think we're in really good shape there. But again, my one concern is, banks want to make sure they get paid, and they're not going to wait. They're going to come in and sell first and ask questions later.
Look what's happened here over the last 2 weeks. It's been after a weekend when we have all this coronavirus talk that it's on Monday. That's when things really fall apart. And then we seem to kind of find some firm ground throughout the week when, and I'm going to use your term, cooler heads prevail, and we stop using so much algo trade.
Well, yeah, I mean, it's not really the algo trade, Jen. Really what happens, think about it. You're home over the weekend, and all of a sudden you're getting a little bit of pressure maybe from the bank. You're getting a little bit of pressure. You're starting to think to yourself, and natural human nature is to start to fester about it and get yourself worked into a frenzy where the first thing you're going to do is hit that sell button on Monday morning, right? You got 2 days to think about it, so it makes it much more challenging. That is the one nice thing about equity markets, is they're open 24 hours. So a lot of that steam gets blown off ahead of time, even like today. We were down limit once, down limit twice, but now they're well off limit and they're trading again. And that's what we want to be able to see. And that's one thing you don't get to see, especially in the cattle and the hogs, because they're only open limited hours. That's it. Goodbye and good luck.
All right, Todd, thank you very much. I do want to look at the futures. We'll go to the live cattle here. And as Todd mentioned, off of the lows. April down 235, 103.40. Feeder cattle, they are down 335. The April is down 428 right now, and the April hogs down 263 at 63.30. Christine.
Okay, thank you, John. Appreciate that.
Yes, ma'am.